Find out how your company can save €1 on every €4 it spends on qualifying research and development activities. Hi guys, welcome back to the accounting channel. Today's topic is R&D tax credits, what they are, how to qualify for it, and most importantly, how to calculate and claim the credit back. This video forms part of a playlist I'm making on Irish taxes for entrepreneurs and startups, and I'll leave a link to the playlist in the description below. And if you enjoyed this video, don't forget to like and subscribe. So, what is the R&D tax credit? Well, in a nutshell, it's 25% of the money that your company spends on research and development activities, qualifying research and development activities, that can be used to reduce its corporation tax liability. But let me give you a very simplistic example. Your company might be developing novel software. So you might have or research and development spend of about €50,000 in year one. And you might also have generated sales in your first year and have made a profit of about €100,000. But in Ireland, profits are taxed at 12.5%, meaning that your €100,000 profit now has a tax liability of €12,500. But what this R&D tax credit basically does is allow you to get a tax credit against that corporation tax liability. So if you spent €50,000 on qualifying research and development activities during the year, you would be able to get 25% of that to use against your corporate tax liability as a credit. So 25% of 50,000 is €12,500, which is your corporation tax bill, and essentially your liability would be nil. You might wonder why the government would allow this, but essentially it is to incentivize research and development spend by companies in the Republic. But what companies qualify for the tax credit? Well, you'll need to meet some certain criteria to be able to qualify for the credit. The company must be paying corporation tax in Ireland. Qualifying R&D activities are being carried out, and we'll go into this in more detail in a while. The expenditure on R&D is not being used as a tax deduction in another country. So let's go through qualifying R&D activities. Your company's R&D activities must meet particular conditions that qualify for the credit. So the following criteria need to apply. It needs to be in the field of science or technology. So think software, think energy, engineering, electronic devices, natural resources, food and drink, biotech, pharmaceuticals, medical devices. You must carry out systemic, investigative, or experimental activities, and this can be basically basic research, applied research, or experimental development. And these advancements must include the broad overall knowledge and capability in the field of science or technology. It can't just be for that company's own internal processes. And it has to resolve scientific or technological uncertainty. So, how do you claim? Well, you have to claim within 12 months of the research and development costs being incurred by your company. And this is normally done when you're doing your corporation tax return, which is before the 31st of October, the year after the year you're doing it for. It's very important to note that the order of claims is quite relevant. So if you have research and development spend in a particular year, let's say 2019, then you have to reduce the corporation tax liability from that year first, and then you can go a year back into 2018, for example, and clear that corporation tax liability, or if you've paid it, you'll get a refund. And if you have credit left over, you can carry that forward into future years. And this is really great if you're a startup or a small and medium sized enterprise that doesn't have a lot of profit or a lot of corporation tax liability to reduce with a R&D tax credit. So you'll be able to get a cash inflow into your company as well. So let's go through an example to see how this would work in practice. So this company's financial year end is the 31st of December 2019, and the start of the year was 1st of the 1st, 2019. In that year, they spent €400,000 on research and development activities, qualifying research and development activities, which means that they will have a credit of 25% of that spend, which is €100,000. So that credit can be applied to corporation tax liabilities that have occurred this year, in prior year, or in future years. Or they can get a cash refund, and I'll show you how that will work. Now, the company for the 12 months ended 31st of December 2018 had a CT liability of 30,000. In the current year, 2019, they had 15,000, and in 2020 and 2021 they might have 11 and 10. That's projected, okay? But that's just the example we're going to use for now. So step one is to clear the current year tax liability fully if possible. So we have €100,000 R&D tax credit, and in the current year we have €15,000 tax liability. So we can go ahead and clear that tax liability now to zero. So now our corporation tax balance is zero. We don't owe any tax for 2019. But we still have €85,000 worth of credit to use. So what's the next step? Well, we have step 2 now. Clear the prior year tax liability. So that's 30,000, so we'll use another 30,000 of our credit against that, and it'll clear our 2018 corporation tax balance down to nil. Now, if your company has already paid this €30,000 tax liability, it will get refunded to the company by the revenue commissioners. But we still have €55,000 worth of R&D tax credit to reclaim. So how are we going to get that back, essentially? You can get it back. You can use it on corporation tax liabilities for future financial periods, or you can claim tax refunds on the amount that's left. They do it in 3 tranches. The first tranche is 33% of the balance of their R&D tax credit that's left for that year. So 33% cash refund. So what we'll do is an easy calculation. Equals the €55,000 balance by 33%. So what will happen here is your company will get a cash refund of €18,150 from the revenue commissioners. Now we do our 2020 period end. We find out we have an €11,000 corporation tax liability, and we still have €36,850 worth of R&D credit left. So we can go ahead and completely wipe out that corporation tax liability down to zero. And in 2021, we can do exactly as we did in 2020, except it's not 33%. Sorry, step 3 here. So step 4, 50% cash refund. And again, this won't be paid until after the 21st of September of the year in which you're doing the tax return. So we have 25,850 left, and we can multiply that by 50%. And we will get a tax refund of €12,925. Then, for the 12 months ended 31st December 2021, our corporation tax liability is €10,000, and we still have €12,925 worth of R&D credit back from when we spent it in 2019. So again, we can go and clear that corporation tax liability. So that's step 5. So just clear tax liability. So this is our step 6. Tranche 3, balance of liability refunded in cash. So we have €2,925 left, and that'll be paid back to us by the revenue commissioners. So of the €400,000 we spent on R&D, which is quite a lot of money, don't forget, the government will essentially give you back €1 for every 4 you spent. So that's €100,000, and this is how they'll give it back to you over the course of 5 years. So you have no credit left over, you didn't pay any corporation tax, and you got €34,000 back from the government in cash. And if you're a small or medium-sized company or a startup, this is really very helpful, this tax credit, because it basically means you don't pay tax and you can get cash refunds for all of your research and development spend if it's a qualifying R&D spend. And that's it for this episode of the Accounting Channel. I hope you found it useful and somewhat enjoyable. If you need help with your R&D tax credits, I'll leave a link in the description below where you can get in contact with us, or you can visit firstaccounts.ie for more information. As always, if you enjoyed this video, please give it a thumbs up, and don't forget to subscribe to the channel for more great videos like this one.